morning and welcome everyone to the Uncensored live Q&A, the trading talk. My name is Danny and I will give you the webinar today. So the first question, the first part will be previous questions, which our team, hello, Nilesh, thank you. The first part, we will go through the previous questions that our team has prepared. We're going to go through them and we will do our best there is a question already. Yeah. Okay, we're going to put your question down, sir. Thank you. But yeah. Actually, it's fine. You guys can ask questions along the webinar, regardless of what I'm explaining. That's the true purpose of this webinar. Okay, as I was about to explain, we will begin with a previous question that our team has prepared. We're going to go through them and we will do our best to give the answer. This is the first part. The second part will be the dynamic questions, which exactly as Mr. Ayan Faris has asked. He pasted wrote the question and I've pasted down here. You see, please brief. Okay, please. Sometimes I'll modify your questions so it would make more sense for the audience as well. But I think the meaning stays the same. The request here was to explain about AvaSocial and copy. I guess this is the true meaning of the question. So sometimes I will rephrase. Yes, I had a feeling. That's completely fine. So sometimes I'm gonna correct the questions, but I'm gonna paste. They will have the same meaning, right? It's just easier to understand this way. So we'll have these questions which our team has prepared. We have these questions from the audience along the way. The third part is more informative in terms of, as you can see, there are links here which I'm going to show you over the chat. This slide is more informative to help explain how analysis works, technical analysis, maybe here fundamental analysis, but we'll get there, okay? Because most of the times the questions already acknowledge analysis, and we're going to go through analysis by answering on the questions anyway. So we'll see how it will go. Okay, so those are all four parts. Okay, it's important to know that any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. Furthermore, I would like to say that the webinar is recorded. Almost every webinar that we are making, there is a question if there is a possibility to receive the recording, and yet I'm explaining that the recording can be found in our channel. Just go to YouTube, put down AvaTrade. You're gonna see the whole library there, all the recordings from other webinars as well. And let's go through the first question: when should I close a losing position? Okay. The second question is, what is the difference between a trading plan to a strategy? Okay. How can I get personal assistance if I have got a question? Okay. Last one is it possible to make profits with $100? Okay, pretty decent what we've got today. Let's begin from that because this is the easiest, and then we'll have much more spare time to go through the first and the second. Or you know what, let's begin from the beginning because I want to also show you guys the interface and how to get used to it. This is the web trader. Okay, just before we begin, I would like to establish very basic things, even though this is not a webinar for beginners, but still. When I'm buying something, it doesn't matter what, my intention is that the value will always increase. Therefore, if I'm using something called take profit, it needs to be in a higher value. Meaning, if I'm looking at the Aussie versus yen, this is obviously how many yen I need to have one Aussie dollar, right? Then if the value increases, I know that I need more yen. Okay, if it makes sense. This is always the primary currency. Now, if the value gets higher, I'm gonna make profits. I buy, if the value gets lower, I have losses. If it's the other way around and I'm selling, it means that now my intention is that it will go down. It means that if it goes down, I make a profit with a sell, and if it goes up, I have a loss. Of course, my take profit will also have to be in a lower when I'm selling, and the stop loss needs to be higher. Okay, so that's very basic to establish. Now we can carry on with ease, very easy and simple to understand. Yeah. And now let's review the question, when should I close a losing position? Okay, so let's suppose we have a position with, what am I going to show you today, guys? Let's go with maybe one of the indices. And let's open the, what do I want to show you? Let's go with Dow Jones. Okay, actually, let's go with NASDAQ. I think the lot size here might confuse some people. So let's go with NASDAQ, US understroke Tech 100. Let's suppose that I have a losing position with NASDAQ. I have 0.01. And just a second, guys. Oh, sorry, I picked the wrong one. Don't worry, guys. Whatever I'm doing, I promise you that I will explain every single thing that I'm doing, and you won't remain. It won't go so fast. I'm just placing some things, so it will be easier for me to explain what I want to explain. All right. So the question here is, when should I close a losing position? So let's suppose, because we are with a buy and the market is actually bullish, let's suppose that we are with sell. Okay. This way we can simulate easier what would be the scenario if we're losing here. Okay, and we are also going to capture here a nice rectangle to simulate our loss area. Okay, we're going to paint it in red. And then we have a loss area and a profit area. And it's easier to understand. And now we're going to paint the upper line in red. And we are going to paint that in, let's say, still white. And we have, I think that's enough. Let's also paint that in maybe white, and that one will make it green. So we have two white lines, one red and one green. Okay, and let's suppose that we started selling at, just a second, let's say 19,700, let's suppose. And let's make it our entry yellow. Okay, yeah. Right, so in this scenario here, of course, I can't go to the past, make a position, and demonstrate to you what would have happened if I if I sold it here. We can't take back the time, but we can use the take profit and stop loss to simulate. Okay, let's suppose we are. This is our entry. Okay, and that is stage 1. Okay. Now, because the market is bullish, don't be scared of all the things here. As I said, I'm going to explain every single thing here on the chart. Okay, now in this scenario, we started selling at 19,700, right? And let's suppose that it reached 2440, which is $700 higher. Okay, and let's take that a little lower, just so we can have a round number to play with. Okay, maybe this one will take a little lower as well. Okay, now let's understand the scenario that we're having here. Okay, the question is referring to what can be, when should we close a losing position? Okay, now if it reached from where we started selling, as I have explained in the beginning, we wanted to establish that when we are selling and the market goes higher, we're having a loss. How much can we lose? So the platform already simulated, as you can see, because we started selling at 19,700 and it reached 2,400. Okay, it shows us that this is $700 away, and because we acquire only one indice, we can just lose 700. If this would have been 10, it would have been 7,000. Okay, very simple. Let's bring it back. If it would have been 5, it would have been 3.5, right? So from that, we understand that every dollar Nasdaq is moving against us will reflect in here. If it's going to move another $100 higher, we're going to lose 800. It goes 200, 900. It goes 300, a flat 1,000. Now, when should I close the position? Obviously, I have few options. One, close it now, right? Wait. I can either wait until certain price. Okay, that's manually, right? Can wait until a certain price, or close it automatically, right? Stop loss. Okay, or take profit if it turns into a profit, but that's not the scenario. The scenario here is loss. So let's suppose that we are now in a scenario when we are losing 700. We have a nice account with 10,000. This is a demo account. Of course, we can survive that. And even if we close it now, we are left with 9,300. Now, what do you think, guys? Is that a scenario where would you close a position, or would you wait, or would you set a stop loss? Of course, this is a scenario when my stop loss is not placed. Okay, this is, let's turn it off. There we go. We turn it off, but I used it just to simulate. Okay, 0.01 Nasdaq buy. Okay, now at, what do you think, guys? Is that a scenario? Is that a scenario where would you guys close the position, or would you wait, or would you set a stop loss? Okay, no stop loss. What would you do? So, of course, as I said, there are a few options. One, I close it now. It's the easiest thing to do. I just get rid of the position by going to the positions. And in my positions, I just click on the X and I get rid of the position. That's one thing to do. The other thing that we can do is to set a stop loss. okay, according to some parameters. So let's suppose that I don't want to lose more than 10% on that position. Never mind that 10% might be a lot already, but never mind. We're just learning, so it helps simulate the scenario here. So let's suppose, oh, sorry, let's turn it to a cell. Let's suppose that my stop loss, I'll place it in here. Something doesn't make so. Oh, let's also use that. Why did I use that? Why did I use that, guys? I used that to simulate what would have happened if we would have sold it here. Okay, I used execute when price hits to simulate what happens if you sell it here and it gets up. And now it's showing me that the possible loss is 1,000. Right? This is one thing to do. The second thing is wait until a certain price. This is actually the third. Let's make it the third, and then we'll have that one as the second. Then it's easier to understand. Now, why would I wait until a certain price? Why would I wait? Now, in this scenario, if I have enough margin in my account, let's suppose I have 10,000 in my account, and I don't want to close it now. Okay, I set the stop loss, I'm relieved. I know that if it gets to the stop loss, I'm losing 1,000. Right now, I'm losing 700, and that's fine, I will survive. Of course, I don't have to do that, but if I did, how will I know statistically if my position can break even and when? Okay, of course, there is no absolute guarantee it will work this way, but we can look at the statistics here and we can understand if it reached that level, okay, 19,979, when was that? Let's place a timeline and see. Okay, that was 22nd July. That was a month ago. Okay, and beforehand to something called resistance. This might be our resistance. Okay, it reached 2 weeks beforehand. Okay, and now if it reaches that level and it proceeds breaking the resistance, that means that I can lose even more. So by placing the stop loss here, if it goes higher, I'm not going to be vulnerable. Okay, from the other end, if I take the stop loss and I raise it a bit, okay, will I lose more? If it reached higher, if it reached not 2070, if it reached, okay, 2,900, okay, will I lose more? Absolutely, I will lose more. Okay, but in this case, if it doesn't break the resistance and it turns around, obviously with my account with 10,000, I might survive that. Okay, now this is again not something that I would recommend you guys to do as some sort of a financial advice or a trading advice. What we're doing here is just showing a scenario. Of course, even if I place it here, it can reach easily, right? But if I place it here and it doesn't get beyond the previous level, okay, maybe a little higher, then it has a chance to turn around, right? So this is also one thing to do. So let's review what we've done so far. One option is to close it now. I have the position, I don't want to lose anymore. I close it right away. The other possibility is to place a stop loss, so we can place it anywhere on the chart, okay? And then the third one is wait until a certain price. Now, if I do this without, let's suppose that I believe in a reversal, but I don't want to I don't want to have a stop loss. Okay, let's get rid of the stop loss. Okay, and yet let's use a stop loss just to simulate. Okay, just to simulate, we're not using it, but what would have happened if I wouldn't use it? Okay, just as an example. So if it reach a higher level, for every dollar we are losing, for every indice we're losing $1. Okay, so this what could have happened if I wouldn't use a stop loss and it reached 2100, which is here. A little higher than the red line. This what would have happened if I wouldn't use a stop loss and it reached 2200. Okay, very easy to understand. Now I want to carry on, but it was important for me that you guys will have the ability to maybe maneuver a little more wisely. Again, I wouldn't recommend doing any of that, okay? But we understand that by placing a stop loss, we can prevent the position from losing more. Also, by acknowledge support and resistance, we understand where can be a potential reversal, and then perhaps we can wait. We can also estimate with comparing our entry to the previous time that it's been there. So on the 22nd and on the 20, just a second. Basically every week it's been through that price beside the higher one. Okay, this dragonfly kind of a candle we have here. And that's quite enough for now. Do we have any questions regarding that? Anything that doesn't make sense, anything that wasn't fully understood? So when will you? Well, Billy, I can't really tell you when I would close it because I wouldn't know, right? But to my opinion, maybe I would act similarly and do something similar. But again, I don't want to be too specific so people won't get any ideas. Okay, this is the scenario. Those are possibilities that you can make. You can also hedge and do more extended things. We're not there now, and I don't want to confuse anyone. Okay, uh, that's the possibilities that I want to show you today. Let's paste the answers now at the presentation. Okay. Of course, I can't give an answer to this question that would be definite, like close it now or close it later, because that depends on the market. All right. What is the difference between a trading plan and a strategy? Okay. Guys, who knows the difference? What is strategy? So if a trading plan is guidelines, right? Such as how much I'm investing, how much return, okay, how many positions, and also how frequent. Now, this could be an example, very, very basic, of a trading plan. So I'm planning to invest, let's say, 10,000. I'm planning to make 10% or 20% a month. I'm planning to take roughly between 3 to 5 positions a week. Again, this is an example. Now, frequent to trade, maybe 2 times a week or 3 times a week, depending on the analysis. Okay, also I can add here technical. Okay, no need. This is part of the strategy. Now, strategy, okay, sources of analysis, exposure, entry, okay, what could be margin usage, diversification. Okay, all of those are just a bit more into depths, how to do the things on the chart, practically how to trade. A plan is just if I correlate this to go into the gym, so I can have a plan to maybe in general to lose some weight, to get a bit stronger, how many times I'm going to go to the gym, what devices maybe I'm going to use. But a strategy will be practically how many reps am I going to do and what exercise I'm going to do, and I hope it makes sense. It's more specific. Again, my people might look at it from the other end and say, listen, Danny, strategy and a plan is the same thing. You can include everything together, and to have all of the things that I've written down in the trading plan, which is fine. But the question here is referring to the differences. And to my opinion, the differences between a plan, which just helps you concentrate in trading in a more specific way, is not the same as a strategy which literally define how you trade, right? What trading style they have, trading style, time frames, right? So that's to my opinion the differences. Again, some people might say otherwise, and that's completely fine. And here I think let's complete it with dots. It just makes more sense. Okay. Here's price action, exactly. Indicators, this is also something that I might include, right? Okay. Right. Yeah. Anybody has any questions about that? About the question, what is the difference between a trading plan to a strategy? How? Okay, so Frida, you're asking how far away the plan should be, and I don't really have an exact answer for that. You can plan a month ahead, you can plan a year ahead. Basically, the plan depends on what you're planning to do, You can also modify the plan. You can decide you've made a plan for the next few months. I don't know, maybe a quarter as an example. And you can then review at the end of the segment how good you were with the plan and how it can go along with your lifestyle, and then modify that. A plan can change. It's not doesn't have to be permanent. Okay, let's paste it down. Any other questions though regarding that part? Then we can have that. Paste it down. All right. We don't really need the dots, but I don't want to start doing that now and burn our time. So I'm just going to leave it as it is. I think it's quite understood. How can I get a personal assistance if I have got a question? Okay, so there are two very easy solutions for that. The first one is, of course, customer service, right? It's not really difficult to get. All you have to do is here at the bottom left, you have a chat. You can click on the chat or the WhatsApp. It's one way. The other one is a senior account manager. It's a service that I mentioned quite a lot. A senior account manager usually are people that we hire that are also trading for themselves, and therefore they have the ability to usually teach and guide and assist with exactly the things that I wrote here, a plan and a strategy and risk money management. Oh, I almost forgot to put that down, right? You know, it's part of exposure. Risk money management. I want it to be this way. Yeah. Right. So for that question, those are the options that you have, guys. A senior account manager or a customer service, which can give you personal assistance depending on the case. Of course, customer service can assist with customer service, and the senior account manager is assisting with the trading side. All right, let's put it this way. Very, very easy. Okay, is it possible to make profits? I just love this kind of questions, guys. Okay, so let me demonstrate to you. Well, that's actually, let's use Nasdaq as an example. Why? Okay, let's put it this way. $100 balance. Okay, our asset is Nasdaq 0.01. Current value equals 19,969. Okay, and what we're gonna do is we're gonna go value. Oh, sorry, that's not how I want to put it. Current price per unit, right? Or indice or unit, it doesn't really make a lot of difference as this is among the indices that we have. So current, let's just keep it price per unit. Okay, and then we have price per unit times amount of units equals value. And then we have value divided by leverage equals margin impact, which in this case, margin impact is necessary amount to open a position. Now, is it possible, guys, to make profits with $100? Is it possible to make profits with $100? Let's look at Nasdaq here, okay, and understand. If the current value is 19,969, and we are looking here at 1 unit, let's do one unit, equals value equals exactly as it is, because we basically multiply that by 1, so the value stays the same, right? If we divide that value, just like it's written here, we divided value by leverage, okay, 1 to 20, equals 998. How do I know that? Because it's already written here, but just for the sake of the discussion, we're going to do it together. Okay, if I divide it by 20, that's what I get. Now, with a balance of 998, position requires, oh, sorry, that's the other way around. Okay. Balance of $100, and this position requires margin. Can I take this position? Can I take it, guys? Do I have enough to take this position, or I don't have enough margin? What do you think? Thank you, Nora. You don't have enough money. So Nora, that's That is correct, but that's not accurate. I do have enough, I might have enough money, but I need the margin. Remember that there is a difference between money and margin. Money in my account, 10,000 in my account, might be, if I translate it with the leverage, it might be more margin, if it makes sense, okay? But in terms of can or can't, right now I can do it because I have 10,000. But my question is, if I had a balance of 100, similarly to the question that we have above, is it possible to make profits with $100? The answer is absolutely yes. But now with NASDAQ in our example, we can't even open the position if we would have 100 in balance. No, we can't. Okay, it's not about the risk, it's about we can or we can't. And now we can't. Why? Because we need 10 times more margin. Okay, with this account, of course I can. If this would have been 100, I wouldn't be able to. Let's look at something else like oil and try to make the same comparison. See if it's something that we can trade. Okay. All right, so we have crude oil here instead. Crude oil, same 0.01, balance of 100. Now the price per unit is considerably lower, 72.23. Okay, we would like to sell. If this would have been a buy, let's make it a buy price. Why not? Okay, and then all we have to do is just replace the oh, it should have been a dot. There we go. Okay. Don't worry, guys. I know that I'm doing things a little faster, but it's really to be able to explain with my remaining time. Okay, but I guess you guys can understand what I'm doing. And now, yeah, that makes sense. That makes sense, but it's a little too easy because the price stays the same because we are dividing it by the leverage. Okay, so let's understand what's something here doesn't make sense. Now, let's understand what is happening here. What is the price per unit? That or this. That depends if it's a buy or a sell. So price per unit times units. How many units is that? 10. Why is it 10 and not 1? Because I've placed 0.01. How is it 10? Was it supposed to be 1? Well, that is because one lot is not equal to 100. One lot equals to 1,000. Therefore, when I've marked 0.01, which basically stands for 1%, 1% of 1,000 is not, it's not equals to 1. Okay, 1% of 1,000 equals to how much, guys? Who know? Who is fast enough to give me the answer? How much is 1% of 1,000? Anybody has any idea? Any idea? Thank you, Lena. 10. Very nice. Very nice. Okay. We're getting somewhere. So 10, right? If I do this with a calculator, just to show you guys. Right. And now, because this is 10, and we are going to multiply the value by 10, which becomes 700, right? If I multiply that by 10, it's 700. But the leverage that we get is 1 to 10. Now the leverage multiplies buying and selling by the leverage. Therefore, if my leverage is 1 to 10, my buying or selling power will be 10 times more. So hypothetically, when I'm with 100, okay, and if this requires 72, is this a position that I can take, guys? Most definitely. Can I make profits with it? What do you think, guys? Can I take the position here? Remember, balance of 100, margin impact is 72. Can I take this position? Thank you, Boca. Very nice. Alfred, yes. Very good. Very good. We understand. Okay, so I can take this position. I have enough margin, and most definitely, if I'll take this position and oil gets from where it's at right now, even $1 higher, I'm going to make profits. Not a lot of profits, but I'm going to make profits, right? Now, of course, I might be limited, and even 0.02 might be difficult for me to handle, but to answer the question in a absolute answer, the answer is yes. Okay? Yes. But it's important to remember, guys, that with $100, even if I can take this small position and I can make profits, I can barely do anything else. You can see that even if I want to extend to 0.02, I won't be able to, right? And we saw that things like Nasdaq are way too expensive for us. And even if I'll try gold as an example, it's going to show me that I won't be able to take the position, right? So it's possible. If it's recommended, it's more challenging. Okay, let's put it this way. Possible, yes. Recommended, maybe not so much. Okay, maybe only in the beginning. Okay, so we have a question here. Oh, we didn't receive any other question beside that question until now. Can you? No, okay, no problem, Billy. I'm gonna explain about AvaSocial anyway, just because we have the question here, so I don't need to. I'm explaining about it now. Let's state the question, see what it's about. So AvaSocial is an app allowing you to follow or copy another trader. Copy means automatic position execution, right? And position execution and follow equals automatic positions messages. Okay, and let's understand how it works. So similarly to the way that things are presented here, but it's a little different on AvaSocial, you're gonna have lists of traders for you to follow. And don't worry, it doesn't, I just took you to the signal section to have nice lists. I can maybe show it to you from here as well. Just a second. Just be open-minded and imagine that those are traders instead of lists with instruments. Okay, but the idea here is to show you how it's presented. Now, when I'm copying someone, another trader, I'm basically linking my account to somebody else's account, and the positions will be executed automatically. I don't have to do anything. Whatever the trader is doing, I'm going to trade as well. Well, my account will be trading automatically as well. I can easily later on review what positions he took and how did it go, simply by clicking on history and then reviewing what was done, and I can also filter it by the date and so on. The other function, to follow, means that I'm going to get messages with the positions, but it's not going to launch the positions on my behalf automatically. I can, as soon as I receive the message, I can take the position similarly, no problem, but this will happen manually. When copying someone, it will happen automatically. Keep in mind that when you're copying someone, you must sign on a certain documents that allows him to trade with your, well, that enables the function for you to copy. Okay, and as an addition, I would highly recommend to do some brief research before you're copying someone for the long run. Of course, you want to copy someone who is good and have good performance, and not just randomly click on someone and hope for the best. Okay, with follow, you can always change, and you can also just just change your mind whenever you want. It doesn't really gonna have a lot of impact on the account because it's, as I said, it's more informative. When you're copying someone, you're practically trading automatically. Now, also, it's something to remember. When you're copying someone or when you're following someone, this doesn't prevent you from training yourself and becoming more knowledgeable about trading anyway, right? It's not something that I would recommend to rely on permanently without any basic knowledge, because without basic knowledge, probably you wouldn't even know who is a good trader to copy. So this is something I would recommend. It's not mandatory. You can go ahead, download the app, enjoy it to its full extent. The app itself is free. To copy someone, I believe there is a tiny markup that you can read about in the app itself. And you can also adjust the difference if you're following someone with a much smaller amount or a much bigger amount. You have an ability in the app to modify the difference between you, and you can take considerably lower positions so you won't accidentally blow out your account. Okay. Whoever asked me this question, I hope that my explanation helped. Okay. Now I'm going to share with you guys some links, hopefully to save you the trouble to look for those things by yourself on the website. That is the education center. That is the logging and deposit. If you're still playing with a demo and you want to get down to business, this is the FAQ and the help center to ask anything formal that you might need. This is again for a real account. And now I have the academy. Okay, I'm also going to show you how to get there from the website. But just before that, I want to give you guys the Q&A benefit special promotion code, so you can give it to your senior account manager and just receive a one-on-one premium market review. Okay. Yeah, I wanted to show you guys how you can get to the library without the link. Okay, so this is super simple. As I said, this is the web trader. You don't need to download or install anything to get to here. If I look here at the bottom left, we have, you see there is a tiny kind of play button. I don't know, like a YouTube kind of thingy. And if you click it, you can click it to go to the academy, and you can click it to go to the library, to the tutorials. And then you can scroll down. There is a lot of content here. It's all for you guys, explaining about the swap, explaining about the entry, all kind of things, fundamentals, okay, Forex. Look how many content there is there just for you guys to use. Okay. All right. Let's see. how much time we have left. Well, guys, unfortunately, in 3 minutes, we have to say goodbye. If anybody wants to add any other questions or something for me to recap in this few moments, you are welcome to share with me now. Anybody has anything else to add, to ask? What would you recommend? Okay, so Sean, you're basically asking me what instrument I would recommend you to trade, and we're not that I'll tell you what I always say. All the instruments are great. All the instruments are great. And you can make or you can lose money with each and every instrument. For me to recommend you what instrument to trade without any ground. You see what I wrote here in the beginning about plan and strategy. So you want to look for an asset that fits to the criteria you are looking for, and not just a random generic asset, because all the assets are great. The instruments are called instruments because we're using them as an instrument. So it doesn't really matter what instrument you're using as long as you're using it properly, right? So I'm sorry, Sean, but I don't have a specific recommendation, but I can just tell you that if you've already made a plan, you can look for the assets that fits to your criteria based on the margin, based on all kind of things, based on how the chart looks like. There are all kind of ways to do that. Unfortunately, I don't have the available time to show it to you now. Maybe next time. Join us next week. Ask the same question, and hopefully I can give you an answer, or you can just contact your senior account manager and he will do it with you personally. All right, guys. So it's been a pleasure. Unfortunately, we have to say goodbye. This was the Uncensored live questions and answer session. I was Danny. I hope you enjoyed. I wish you all a fruitful week. Best of luck with trading and have a good day.